All right, let's dive right in. In this explainer, we're going to document a specific trading methodology called market DNA using a case study on WTI crude oil. Our goal here is pretty simple. We're just going to observe and narrate the step-by-step application of this model exactly as it's been publicly documented. So, first things first, it's really important to get what this method is, and maybe more importantly, what it isn't. Market DNA is described as a proprietary geometric system. Now, the documentation is very clear on this. It does not use any traditional technical or fundamental analysis. That means no indicators, no familiar chart patterns, no economic reports, none of that. Our job is just to watch and describe what the documentation shows us. Here's how we're going to break this down. First, we'll introduce the case study itself. Then, we'll walk through the process phase by phase, starting with the all-important planning stage. From there, we'll look at a couple of key events that were documented, known as Phase 2 and Phase 3, and then we'll finish up with some absolutely critical disclaimers. Okay, let's get into it. The focus of this documentation is a single cycle of the market DNA model, and in this case, it was applied to a WTI crude oil chart. Again, just to be clear, this is all being presented for the purpose of public documentation and verification. This is what the initial setup looks like. As you can see, there are several geometric shapes laid right over the price chart. The documentation gives them specific names, like that gray shape called Triangle 3 and the blue one called the trapezoid. Now, we're not going to get into how these are drawn or what they mean. We're just here to see how they're used in the process that's being documented. And that brings us to Phase 1, entry and planning. You can think of this as the blueprint stage. According to the documentation, this is where every single parameter for a potential trade is defined right up front, before anything actually happens in the market. We're talking entry points, risk, and even the profit targets. So the plan kicks off by defining two potential entry points. The primary entry is called M, and it's set at a price of $57.66. Then there's a secondary entry, just in case, labeled PC, which is set a bit lower at $54.29. Now, this right here is the heart of the planning phase. The entire model is built on a very specific set of risk parameters. For this case study, everything is based on a hypothetical capital of $100,000, with a really strict maximum allowed drawdown of just 5%. You'll also see other parameters that are part of the model, like the trapezoid time duration and third triangle domain. The main takeaway is that this whole framework is set in stone before the cycle even begins. And this leads to a super important point in the documentation, which I'm going to read to you word for word. It says, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So what this means is that the amount of money put at risk isn't just a random choice. It's a calculated result of that risk framework we just saw. So what happens when you plug all those variables into the model? Well, the resulting trade size for each of those two potential entries is calculated to be 0.28. This number is a direct output of all those risk parameters that were set at the very beginning. The plan doesn't just cover entry and risk, right? It also predefines three different exit targets. Target 1 is set at the lower boundary of that blue shape, the trapezoid. Target 2 is a specific point called apex N, which the documentation refers to as a safe exit. And finally, target 3 is the very top of the trapezoid, and that's marked as the full exit for the entire cycle. This chart basically shows the two possible profit outcomes that were planned for back in Phase 1. In the first scenario, if only that primary M entry gets triggered, the projected profit was just over $1,800. But in the second scenario, if the price were to drop and trigger both entries, the projected profit would be over $4,000. These were the two potential outcomes laid out from the very start. Okay, so that was the entire plan, laid out before anything happened. Now we move on and get to observe the market events as they actually unfolded. The first key event that was documented is called Phase 2 trapezoid contact. And here we see it. This is the first documented event after all that planning. On December 26, 2025, the chart shows the price reaching up and touching the lower boundary of the trapezoid. This happened at $58.82, which corresponds perfectly with the price level that was defined as Target 1 all the way back in the initial plan. So after hitting Target 1, the cycle moved into the next documented stage. This one is called Phase 3, the N-level event. Just a few weeks later, on January 14, 2026, the documentation records another key event. we can see the price reach the level labeled Apex N of Triangle 3 at $62.33. Once again, this lines up exactly with Target 2, which was predefined in the plan as the safe exit point. So let's just quickly recap the state of the trade at this point. The initial position that was triggered at the M entry is active, but the price never actually dropped low enough to trigger that second PC entry. This means the trade is following the path of scenario 1, the one we saw in the initial plan. And this is where the current documentation leaves us, with a forward-looking question. The next and final stage of the original plan is Phase 4. The observation is still ongoing, so the documentation is just going to continue to track the market's progress toward that final target. Okay, before we finish up, it is absolutely essential that we review the disclaimers that were provided with this case study. This context is critical for understanding what this documentation is all about. Please pay very close attention to these next few points. First, and most importantly, this is not financial advice. It's for informational purposes only. The model's documentation also prohibits using leverage above 10. You should never, ever invest essential funds that you can't afford to lose. Remember, this analysis is purely for public documentation and verification of the model. And finally, any risk management has to strictly follow the specific instructions provided. And that concludes our walkthrough of this market DNA case study on WTI crude oil. We've simply observed the method's documented application from the very detailed initial planning all the way through 2 of its key target events. For more information from the source, you can visit their website. Thanks for watching.